Well, hello everyone. It's such a pleasure to be here today. Welcome to our session. Cloudy with a chance of recovery. We're forecasting Asia's economic outlook today. Now, for those of you who don't know me, my name's Oriel Morrison. I'm going to be your host today, talking to our brilliant panelists. Now, obviously, it's an incredibly interesting time to be talking about all things economy and economic growth. There are so many unknowns that are still present. Asia, of course, alongside the rest of the world, has been upended by this COVID-19 pandemic. And as yet, the situation is far from over. We are still, of course, seeing new outbreaks of the virus coming around globally, right around the world. As a result, some countries and their economic activity has stalled as a result. If you listen to Goldman Sachs, who spoke on CNBC this week, now Goldman Sachs is saying that Asia is well placed for an economic recovery compared to the rest of the world. And that's primarily because of its ability to contain COVID-19 outside, of course, of places like India and other parts of Southeast Asia. So the essence of any recovery, as we're going to be talking about today, clearly lies in controlling the spread of COVID-19. And only then can we look at restarting some of these stalled economies around Asia, talking about these government policies and opening the world up once again. Just before I open the chat up to a conversation, I really wanted to just highlight some of the key numbers here. IMF, they've just released an upgrade to their forecast for global growth this year to a contraction of 4.4%, but downgrading next year to growth of 5.2%. If you look at the ADB and we break that down a little bit further, they're saying developing Asia is in for a recession for the first time in 60 years. They're forecasting a slowdown of 0.7% in developing Asia in 2020, but a rebound next year of close to 7%, which of course is quite strong. Now, China, we all know this is where the virus originated. They're going to be one of the fastest economies to recover. They're set to rebound by 7.7% in 2021. That's impressive by anyone's standard. The OECD, in fact, has come out and said that China will be the only one of the G20 nations to post a positive GDP number by the end of the year. Very different situation out there in India. They very much struggled to constrain the spread of COVID-19. The ADB puts its contraction this year at 9%. The IMF said that's probably closer to 10%, if not above 10%. Now, none of these figures is really surprising given the situation with COVID-19. The really worrying part, though, is that any recovery could very easily be derailed by a prolonged pandemic, tougher containment measures, and of course, any lack of a vaccine. So we've really got to take all of this into account when doing any forecasting. Those uncertainties are not going away anytime soon. On top of that, it's about policy support. How much more can governments do at this particular point in time? Policy support packages announced to the end of August, that had reached a total of 3.6 trillion. So that's about 15% of regional GDP. There are some bright spots, all about technology, all about innovation. The need for digital services, of course, in e-commerce has grown and expanded. So, of course, that's a bright spot that we'll talk about. And Asia is well placed to really help with that push forward in innovation. So let's get straight to the panelists today. I'm really lucky. We've got a brilliant group of people on hand to talk through all of this. I'm joined today by Rachmat Kaimuddin. He's the CEO of Bukalapak. Sopnendu Mohanty, the Chief FinTech Officer of the Monetary Authority of Singapore. Parag Khanna, Founder and Managing Partner of FutureMap and the author of The Future is Asian. And Jenny Lee, the Managing Partner of GGV Capital, is with us today. So welcome to you all. Such a pleasure to be here with you. Now, Goldman Sachs, as I just talked about, said Asia's well placed for an economic recovery, and that's largely because of that ability to contain the spread of COVID-19, certainly in the major parts of Asia. Parag, I wanted to bring you in first because on one of your latest newsletters that you've released, you said you don't have to look very hard to see that Asia's time has come. Talk to us a little bit about that, because it really aligns with what Goldman Sachs was saying in terms of Asia's position within this recovery.
Absolutely. Thanks so much, Oriel. Pleasure to join you again. So, of course, I don't disagree that controlling COVID is a major part of why the recovery has been so rapid. But, of course, neither Goldman or anyone else, I would hope, would dispute that it's also the underlying fundamentals that are in place in Asia to propel this recovery, and why we shouldn't be as surprised by it. Because even though we haven't seen a pandemic in recent times, neither here in Asia nor elsewhere, though, of course, there was the SARS epidemic. But we have seen crises. And those policymakers, regulators, executives in this region remember the 98 Asian financial crisis and, of course, the GFC from just over a decade ago. And each of those previous economic crises has taught the region very important lessons around monetary policy reforms, trade, and fiscal policy. And in all three of those areas, you've seen a steady momentum around reforms. Countries have learned the importance of building their reserves, having flexible exchange rates, and open regionalism in their trade policy. There really is, Oriel, a 20-plus year track record of rising intra-Asian interdependence, and that's been a major cushion against global demand shocks, which of course the pandemic was as well. So the foundations of resilience have been built up over the last 2 decades, and those apply to high income, middle income, and even surprisingly low income Asian countries. And one of the interesting things to study right now is not only how some of the poorer countries in the region have managed to control COVID through social and political measures, but also how they have taken the playbook of certainly more well-off countries in terms of fiscal stimulus to cope with the present situation. Fortunately, the IMF is also there with a lot of support. The U.S. has been very quick, again, with swap lines and so forth. The World Bank is also in position to help. So as you have poorer countries moving quickly to contain the situation, again, politically and economically, that I think is important. But again, what's the underlying transition that's also underway is that you have large populations that are in a rapid transition towards services sector economies. And so being able to control COVID and allow people to move and circulate, and now to be enabled by sort of at the digital level. And I think that's one of the crucial underlying shifts that is helping Asia recover as well. Again, large populations, still the factory floor of the world, not just China, but also now Southeast Asia as well, but the fiscal measures at the same time. Now, just one point about trade, open trade regionalism. This is absolutely critical because there aren't other parts of the world where you're seeing a significant intra-regional, large-scale trade liberalization agreements underway, such as you have here in Asia with the Regional Comprehensive Economic Partnership. Now, China has already seen a rebound in some of its export categories. It also has been absorbing regional exports. So the so-called Sino-dependency of other Asian countries, which is a worrying sign for some people who look at the overall trade positioning and dependency of countries. And I do sympathize with that. But when China is resurgent and you have trade liberalization with China and you have a global demand shock, clearly, being hitched to China can be a positive thing in terms of the rebound, and that also obviously helps to explain some of the positive forecasting around the data. Let's also remember the Belt and Road Initiative. Equally controversial, no doubt, but let's remember that in the last few years, a lot of that investment capital has been redirected towards Central Asia, South and Southeast Asia, so the immediate periphery as well. So you do have a lot of momentum behind this intra-regional integration again that I think is going to be important. A word about India. It's been an outlier both in terms of COVID and the continued very strong challenges in overcoming the pandemic, also in not joining RCEP, but it is still very keen on looking east. And the bright story in India, of course, is the record FDI inflows into the technology sector, Reliance Jio, obviously, and others. So what we are seeing is, again, the possibilities of an accelerated renewal around some of these critical sectors that we know India is already very strong in, and scaling those out. And that's one of the green shoots I would look to in terms of what foreign investors, what American investors should be looking at, because digitization. So as we know, at the high end, 5G deployment is scaling up across Asia, but penetration is still low. And remember that when you talk about Asia, you are talking about somewhere between 4 and 5 billion people. So just because you've heard about 5G deployment and some other technologies, industrial robotics and so forth, remember that scale. There's still a very long way to go, a lot of upside, a lot of headroom, a lot of runway when it comes to increasing productivity in Asia across these large populations. And that's why there's a continuation of large-scale infrastructure investment, both hard and soft. One of the things to look at in the hard infrastructure is moving away from some of the stranded assets in traditional energy areas into renewables. That's going to be a very strong push. Agricultural productivity, because we know what can happen when borders are closed and you have difficulty in moving food across borders. So that's already a big strategic priority here in Asia, generating enough food through technology and more advanced agricultural practices. And again, the digital, which I know that Jenny and others are going to get into, from e-commerce, ed tech, and so forth. Huge opportunities. Final two words, or points. I would say one should not overhype the notion of a U.S.-China technology Cold War that is carving up Asia. There is technological competition, but I don't think the world is going to bifurcate into two sorts of blocks. And if you want to have ground zero evidence as to why it won't play out that way, just look at Southeast Asia. Because in this region, what you see is you have American, Chinese, Japanese, and other global investors that are actually capitalizing national champions. They're building ecosystems. They're here to access the markets. There are trillion-dollar economies here, whether it's Indonesia or Thailand, almost mid-tier economies as well. And each of them, in light of data localization and their national protected markets to some degree, you really have to support and do joint ventures here. And so the story is not one of either choosing America or choosing China. It's actually quite being an open marketplace. What that means, of course, for investors is moving beyond a China plus model as well in supply chains and thinking more in terms of make where you sell. So I advocate this shift. China plus, everyone knows about. Many firms are saying, oh, we're thinking about China plus. Actually, you need to go long on this idea of make where you sell. Each of these countries has the potential to be a large enough destination to merit significant operations there in its own right. Bear in mind, you're talking about very large states unto themselves. So, we know that the election is not going to bring, a shift in U.S. policy on trade in terms of the Trans-Pacific Partnership, which is a major sore point across the Pacific. But that doesn't mean that, of course, in other areas, the U.S. Can't be very, very strongly positioned. And so I would advocate, two important things here. One is playing the capital account liberalization. Again, it's politically controversial, but what China is doing now with its capital account and attracting those massive inflows is what Japan and Korea have already done. China is doing it. Let's remember that the next tier, what I call the fourth wave of Asian growth economies that are poor but populous, are going to start to undertake those same reforms. They have to, of course, because they're concerned about drawing in or substituting for the capital outflows as a result of COVID. So capital account liberalization, and part of that is privatization, a huge opportunity here in the region. Again, the lessons of the last 20 years have taught regulators and executives they can't bury their heads in the sand. They're going to have to privatize assets. There is political stability in the region owing to recent elections that have also taken place. So now is the moment to be pushing for that as well. And there's a lot of assets here in the region that are very attractive. So Oriel, let me hand back over to you. Thanks so much for allowing me to kick off the conversation.
Parag, that was a beautiful summary of the many moving parts that we're dealing with on a global front, of course, but specifically bringing it back to Asia. I think I would like to pick up on a very important point you made in terms of investment. And it comes so much of the recovery is going to come down to innovation and technology. Some highlights that I've just picked up around the Asian region: Indonesia unveiling a national AI strategy. It's launched a $1.5 billion investment fund to drive digitalization there. Japan is pushing legislation to advance tech-driven super cities. Singapore investing $2.5 billion on ICT to support businesses, and Australia allocating $465 million for telehealth care. That's just a few of the strategies that are going on a government level around Asia in terms of technology. Sopnendu, let me bring you into the conversation here. We had a long conversation on Monday about what pillars you see that are really important to driving a recovery here in Asia. And you talked about technology, you talked about innovation, and in fact, from the MAS point of view, the Monetary Authority of Singapore, you guys have actually launched almost $2 million in prize money for solutions that can help financial institutions respond to COVID-19. Well, not just COVID-19, but also climate change. It seems like Singapore, almost as always, could well be ahead of the curve here.
Well, look, that money which you're talking about is primarily around getting the global community to come together and talk about different solutions which is available in the space of climate change. I think the broader question is during COVID-19, there are a few things which came out very strongly. Definitely, the desire was to, and this is an opportunity for many of the firms which were at the sidelines of digital transformation. They almost made it as a mainstream strategy so that they can get into this bandwagon of getting quickly digitized. And if you look at different parameters, different numbers, it truly reflects. Let me take one data point. During the crisis, when I was looking at the fintech investment number, almost and by September, Singapore has attracted 1.2 billion dollar worth of Singapore dollar worth of fintech investment in during the crisis. Almost four times of this money went to fintech companies which are digitizing SMEs. Almost twice the money went to fintech companies which are providing digital tools for people to digitize faster. And there was a survey done for the SMEs who did express that there'll be a decrease in the revenue, but they're not stopping their own investment in the tech side. They're going to put more money to get themselves digitized because they know as they come out of the crisis, largely it will be a high tech and a low touch construct. And for them to do that, they must be equipped with a lot of technology. So that's at a very macro level. You see a massive shift, and there is a joke goes around what the CIOs and the CTOs could do. COVID-19 could do to the firms to get them to this new digital platform faster than ever they would have imagined. So that's the big trend. But I would like to speak on the broader, the two big things happening, and it's, from a policy standpoint, is there's a shift of a lot of this dial, and Parag briefly touched about the whole data localization point, because there are two policy focus would be there. One is the data connectivity, one is digital connectivity. And if you want to go through a recovery process, you got to find a way your digital infrastructures are getting connected to different jurisdictions so that there's a flow of money in the most elegant way, in the most efficient way. There's a flow of data moving from one jurisdiction to other jurisdiction, global supply chain, which relies on a lot of this data and financing SMEs cross border, has to have an access to such data. And not having a transparent, easy access to such data much will create a lot of barriers for the recovery process. So having a policy imperative to start engaging different market to connect that digital infrastructure will become a big part of the policy thinking. And within the data space, I would typically block people into three categories. One, there's a data producing country: Indonesia, India, Malaysia, Thailand, large population, not Malaysia, but maybe Thailand and Philippines, and they're data producing countries. Then there's a data refineries, people who take this data and store it, process it, and give it data consumers, a lot of the endpoint apps. You will see a lot of regulations to start thinking about, from economic terms, how to ensure that these three participants have a proper economic value capture in the respective market. Once they understand that properly, I think there'll be greater synergy on the data sharing, from the data sharing perspective, because today a lot of the country are not clear that what value loss they're having, because they're the large data producing countries. So you will see a lot of rationalization on the data localization side, and hopefully together that brings a new era of deeper connectivity. And lastly, I will end with saying that we also have to focus on the domestic market. A lot of countries don't have a foundational digital infrastructure, which is very critical for this recovery process. When I say digital infrastructure, which means you should have a strong digital identity infrastructure, you should have a strong interoperable payment system, you should have a strong trusted data system, which ensures there's a golden source of data which can be shared, and the fourth, a strong consent system, because privacy, right to access to data and ownership of data becomes a big public debate. So having this four foundational infrastructure for every domestic market becomes almost the starting step before they can start connecting each other. So these are the broad shift on the policy side when it comes to technology.
Yeah, I think that makes a very valid point and flows on nicely from what Parag was talking about. So let me bring Jenny in to this part of the conversation, because Jenny, you follow what's going on in China very closely, and I think that China is key to this conversation. You know, Parag touched on this early on in our conversation about the fact that he doesn't believe that there are literally going to be essentially two parallel technology streams, one coming from the West and one coming from the East. But putting this in the context of what Sopnendu was just talking about, and how important China is to this push forward in digitalization. I mean, the numbers are most of Asia in terms of the population has access to mobile broadband, but something like only 14% have access to fixed. So there's still a significant lack of infrastructure, and China was one of the major world powers actually that is pushing forward when it comes to this this innovation, this technology, this infrastructure. Are you with us, Jenny? It seems like we might have a little bit of an issue with Jenny's audio there. So I might just, while Jenny's fixing her audio, let me just check. Jenny, can you hear us? Yeah, no, we still have an audio issue with Jenny. So Jenny, I'll get you to fix that. In the meantime, let me head over to Rachmat in Indonesia, because so again, Sopnendu talked about Indonesia being part of the the data on the data production side. This is obviously an area you know well. You run Indonesia's biggest e-commerce company. I mean, in terms of digitalization, innovation, technology. Especially in the context of Indonesia right now, because unfortunately Indonesia has the highest COVID-19 death toll within Asia. You've got a fairly upending political situation at the moment where you do have rallies on the street, and this is causing a lot of concern about the spread of the virus and how Indonesia is going to contain that, which means your job and your role within this pandemic even more important.
Yeah, thank you, Oriel. Basically, just a little bit of context. Yeah, as Sopnendu mentioned, we are data producing country. Indonesia comprised of about 270 million people, the fourth largest, most populous country in the world, and it's quite a large country with challenging geography, if you will. It has 17,500 islands, 3 time zones. So managing this type of geography and demography is quite challenging for government, obviously. And I think at the moment, what Indonesia is trying to do is to balance between containing COVID as well as keeping the economy going. And because of maybe like Indonesia has gone through some crisis before, probably one of the hardest hit during the Asian crisis in 97, 98. And there's a lot of infrastructure, as Parag mentioned, in terms of managing the economy. However, before maybe 20 years ago, the small and medium businesses are actually still going quite strong, and the Asian crisis at that time is impacting large business. But COVID, because of the nature of the pandemic, is basically impacting everyone, including small business. And if we put like a very strict say stay at home policy, it's probably impacting a lot of people as well. And it's one thing to get infected by COVID, it's the other if you cannot make a living. So I think the government now is pushing, maybe if I can say, like maybe two-pronged policy. One is, while trying to contain, we also push about new normal behavior, as well as pushing stimulus. On the stimulus side, the government injected maybe around $50 billion, and they split into two. And this is probably where all the managing economic crisis comes into play. So maybe about half of that is focused on healthcare and social safety net, just to ensure that people can still make a living, giving out food and everything. And the other one is to build business and infrastructure. A lot of this is actually to ensure there's a lot of liquidity in the business side, and this is also both on the SMEs as well as the business, the large business, banking, and also keep building infrastructure. On this new normal behavior, what we are seeing here in Indonesia is that initially we have this pretty strict wide-scale social distancing, and then now we start transitioning. So now business is open, but we are forced to conduct business with strict protocol. And also the government is quite active in working with technology company, basically to digitize the business. So people like us and other large technology companies was basically being invited, and we communicate quite intensively, and we are involved in a lot of these government initiatives. Like for example, if there's like some government stimuli, then we'll be check whether it's more beneficial, more accurate, and effective. It's given if we work with us, and we see some of those going on. And more closer to what we are working on, I'm working on technology company in e-commerce, and what we actually the products that we have is an online marketplace as well as SMEs online to offline business. Basically, we digitize the mom and pop kiosk. We start seeing this also a lot of activities. Yeah, in the online marketplace, transactions goes up, new users goes up, new merchants goes up. Of course, the things that people buy are changing. Basically, people now shift on the things that make them more comfortable at home, like hobbies, things that actually affected their health. People buy a lot of vitamins. People buy bikes, for example, just so that they can take care of their health. And we see also shifting on value for money goods. Like the average order values we see is also drop a little bit. So more transactions, but average order goes down a little bit in there to compensate maybe of people the economy crisis and whatnot. What is quite interesting as well that we see that I think online people see that everywhere. On also in the online to offline business, this mom and pop kiosk, we see quite significant increase in terms of transaction as well. Maybe because now people still want to buy stuff, but they don't want to go out very far. And the big supermarket, for example, they buy in their neighborhood mom and pop kiosk. So I think this is kind of trend that we see. People buy closer to home. But also, it's quite interesting. At least we see that people are quite resilient. People are changing their behavior and ensuring that actually they get what they need, as well as they can continue making a living. That's probably what we can see in Indonesia, Oriel.
And it's exactly that, Rachmat, isn't it, that's going to really accelerate and push the recovery moving forward. I wanted to put a question out there to our viewers today. We'd love to get a little bit of interaction on polling question 2. I think we want to go straight to that. So the question for all our listeners out there today, and again, please do take part in this, is outside of China, which Asian country or region do you see most prime for positive economic recovery and growth going forward? So you could choose A, India, B, Southeast Asia, C, Japan, D, South Korea, or E, any other particular country there. So at the moment, it looks like South Korea that's adjusting very quickly. Not many people are most positive about India, interestingly enough, even though it's going to be hit pretty hard. This year, it does look like India is going to, if you look at the ADB forecast, India is going to bounce back fairly quickly. There's also not much coming through in the other line, which I would imagine could be any particular country in Asia. Parag alluded to the fact that some countries, even small countries, have done pretty well in containing the virus. I think you can easily put Vietnam in this category. So South Korea, the winner. Parag, are you surprised by any of these results?
I might be somewhat surprised by South Korea because, with or without COVID, though, of course, you could expect a country that is so advanced medically, technologically, with the social cohesion and good government that it has to respond well to a situation like the pandemic. However, we know that their growth was heavily under stress well before the pandemic. So the meaning of the word recovery is quite different for a country like South Korea than for a country that was at very high growth, set back by the pandemic and set to regrow. So in other words, Korea has structural issues, where it's plateauing in a number of areas, struggling to keep its advantage over China. And so forth. But again, I don't want to focus on the negative. Korea is such a role model in many, many ways. But when we're looking for recovery, we're saying as a community of global investors, where are the markets where we want to put assets for the next few years and make investments and bet on a long-term, sort of next growth wave. And there, I would practice what I preach and look at Southeast Asia because the structural momentum here is very, very strong.
All right, Sopnendu, please come in.
Yes, I would say I don't know who where the audience are sitting from. I think where you're sitting from, if you read the newspaper and hear the TV analyst, you'll get the response what you saw. But I would counter argue saying that the country which is best poised to recover is which has got the best digital infrastructure. And I would question that some of the perception that these countries are going to recover may not have the right infrastructure to get started the moment the crisis goes down. So the speed at which recovery happen will country with a great digital infrastructure, India, Singapore, and all the countries which have put heavy investment on the national infrastructure, on digital connectivity, good payment system, access to data. So I would put another lens to understand the existing infrastructure before filtering out which country has the best chance to recover faster post COVID-19.
I think that's a really interesting point. Sopnendu, to answer your question, the majority of our listeners, our viewers today, are in fact coming to us from the US.
I'll pick Parag's point. Look at what Reliance did during the crisis. Out of bound, they raised money. The reason they're able to raise a lot of money is because the infrastructure is there to quickly respond to the crisis moment things goes to something controllable. So I think we should not get influenced by the current COVID-19 crisis, which is happening as we speak. But once that is over, very different response will come.
I'm glad you're using the term "once that is over." I'm sure that many people listening are looking forward to that being the case as rapidly as possible. So bring on those vaccines. Jenny, let me bring you into the conversation.
I'd like to jump in.
Yeah,
I think we need 5G connection in Asia. So I truly believe that the right digital infrastructure is key to a faster recovery and also a faster reacceleration of the growth. And if nothing else, we should look at China, right? So I think that the fact that China, after a quarter of lockdown, has able to reaccelerate growth, really hinges on a few things. I think one, at the infrastructure layer, a lot of the cities, a lot of the infrastructure network has gone up from 3G to 4G to even 5G. I think for those of you who's been on the Great Wall and dying to get back on the wall, you get 5G there, right? You can have you can send messages, you can take video, you can have video conferencing right there. So I think number one, the infrastructure is in place, and number two, the payment infrastructure. So the digital economy key infrastructure where it regards to mobile wallets, where it regards to payment infrastructure, and also the end-to-end completion of transactions. I think those are in place, which is why when the economy recovers, it does help to accelerate more of the transaction. And then along with that, we cannot ignore the fact that in addition to the digital and infrastructure that's in place, you also have to have a corresponding offline support infrastructure. So the offline support infrastructure could be whether it's policies, whether it's in terms of regulation to support more transactions, data privacy, and security. And then you talk about physical infrastructure like logistics, right? So, for example, if Indonesia can have, through this period, build up a strong logistic infrastructure to deliver goods and services to the end consumer and to enterprise, then a big piece of the recovery is going to be e-commerce, right? Or along with the recovery, you're going to see e-commerce grow as well. So I would say, I think number one, do not ignore the readiness of the infrastructure or the availability of infrastructure. And sometimes we don't see it in normal days, but in this COVID situation, I think it's helped to accelerate the push and the adoption. So I think one at the infrastructure layer, and then the second layer that we have seen is consumer behavior. I've had conversations with some of the key officers within the technology division of the government, and they said, particularly in Singapore, that technology adoption has leapfrogged by probably more than 5 years. And it's not the fact that the tech infrastructure was not in place; it could be in place, but consumers have had more of a less willingness to adopt when there's no need. But I think COVID has shown us that when the need arises, that the acceleration will go up significantly. In this case, 3 to 5 years. I think in China we have seen a playbook that we can learn from, right? Definitely, I think China is a great playbook. Is that on the consumer side as well? We have seen acceleration in many digital economies, areas like education tech. Not just the consumer who's going to have their kids take on tuition online or have technology to help them with their homework, but even the schools, the more traditional schools, are now having hybrid sessions that has both offline and online components. So it goes from education to health tech, to even exercising in your own home in the virtual gym, right? So the consumer behavior has definitely changed. It's accelerated adoption, not just in the millenniums, but also, the younger generation, as well as the more elderly generation as well. And I think on top of that as well, we see enterprise. Today, when we look at how China has recovered, I always said that, if for good or for bad, China is a great playbook. And I would, being very positive on Asia's growth, I do feel that Asia can take a lot of learnings from what has happened in China. I think from how the COVID virus situation erupted in China, how they handled the situation, those were all almost like a movie being played out in front, where you can see them happening and it's going to hit us. You can see the wave coming and it's going to hit us. And so how do you, now you have, a couple of months or weeks to react. And so, how you react to it becomes very important because you had this kind of pre-warning bell. Again, I think in the recovery portion, if you look to China as a pre-warning of premonition of what can happen, then again, what we have seen now in China is that there is on the enterprise layer as well, this whole key consideration around business continuity and backup is very key. And so what does that mean, right? It also means that it's not just happening at the consumption end, it's also happening across the entire infrastructure. China is supporting and accelerating the development, the R&D development of everything from supply chain to chipset to technology, and all the way, to whole cloud infrastructure as well. And if the world cannot coexist nicely in terms of global sharing of resources, then we may go down the path where there's alternative, right? And so it's not just one company globally that supplies a single chip, but maybe you're going to have multiple companies that can supply the chip that can be made available to all the different countries. So I think the business continuity part is extremely strong. That's why we see enterprise in China rethinking workflow. They are saying, instead of having all my workforce in one city, can I have multiple workforce in different cities as a protection, right? If I cannot have them offline, can I have 50% of the workforce working online versus offline? For factories, in the past they were hoping for workers to come back from the different towns, from the holidays. And now they realize that if travel gets shut down again, you may not have that luxury. And so what's happening? We're seeing also an acceleration of automation. In the past, automation was much talked about, but penetration adoption rate was low because of cost, right? Cost to serve, the break-even cost analysis did not make sense. And then more importantly, there's also the concern about how automation or robots, right, would be taking away jobs from the regular worker out there. But I think today it's not about those, not just those concerns. It's about, can I keep the factory running? in time of crisis. And if that's the case, I need to have my dual redundancy backup or continuity. And so the whole concept of hybrid workforce, where you do have automation alongside, the regular workers, it's now very accepted because everybody wants to see the supply chain continue to work. Because even in a lockdown situation, we want goods to be delivered to us, whether it's by drones or by humans, by autonomous driving cars. You need that because we are all stuck at home. So I think I'll just pause there, but I think there is a lot of progress that we have seen hugely in terms of the adoption of digital economy, but also as a result of that, I think it's forcing companies, governments to rethink, all the full stack of infrastructure to support what we call is the new normal. And I think if Asia can take a page there, and ready in terms of preparation, I think we'll be in a very good spot. Back to you.
I think that really begs the question, and Parag, you touched on this earlier on in the conversation, that is the divide between technology in the East and the West. I mean, to simplify it, that's essentially what it comes down to. You mentioned before that you don't believe that this is going to be an issue going forward. Can you talk to us in a little bit more detail about why that is the case? Given the situation that Jenny's described, we might see more interruption in supply chains and so forth. Without that unity, there is significant discord at the moment between China and the United States when it comes to technology. You only need to read the news every day, and something more is being reported on between between the US and China, and the discord there.
Sure. It's just that the world is a lot more than just the US and China. I think it's a very top-down view. And again, as someone who focuses on geopolitical lenses, there's no question that the United States and China are the two most powerful state actors in the global system. But all technology does not necessarily originate from these two countries. And the adaptation process of those technologies into new markets involves many bumps and adjustments and accommodations along the way. And the kind of industrial policies that help China become China are now part of what's being practiced in many other countries. And there are other competitors. I mean, if we look at 5G, yes, it's the United States that's pushing the hardest to pull Huawei out of the national telecom infrastructure of many countries, but it's Ericsson and Nokia, which are of course European, and Japan's DTT and others that are the immediate beneficiaries of that. And potentially you will see, Reliance out of India copying that model and applying it to even poorer parts of the developing world. So again, you don't really have a bipolarity there. An emergent marketplace because the technology is evolving very quickly. If you look at artificial intelligence, look at all of the money again that's being plowed into AI as a service firms, again, in countries like India. So does a third party country or client or company have to choose necessarily between a Chinese or an American sort of model, so to speak? Not necessarily. There's a marketplace of AI as a service per se. Then remember, there's again the bottom-up regulations, the data localization, the technology transfer, the joint venture requirements, and all of these kinds of things that are playing out here in Southeast Asia in particular, that demonstrate that just because a company or again a country is working with investors and technology partners from the US, from China, from Japan, they're already proving that you don't have to be dependent entirely on one or the other's exclusively money or technology or political allegiance. So I have called this multi-alignment. And I urge everyone to look at every single one of these issues, not least technology, but also geopolitics and diplomacy from a bottom-up point of view, and understand that whether you are a wealthier country or a poorer country, you know the game. You're capable of negotiating and practicing this multi-alignment in this marketplace and playing vendors and suitors off each other to get the best deal for yourself. And so it is far too complacent, in my view, to sit back and have a teleological view where the next 20 years are just us watching this, reprise of the Cold War, because history doesn't really work that way. It doesn't repeat itself as such. And again, the law of technology diffusion is truly the most powerful law in history. It's certainly more powerful than the idea that either the US or China, take your pick, is going to dominate the future.
Yeah, interesting. Parag, I want to bring Rachmat into the conversation here to get a view on the ground. Because Rachmat, you are making these decisions on probably on a daily basis. I'd say when you look at where you're going, for your technology needs and the technology needs that you can't do internally.
Yeah, of course. For us, this is kind of decision that we have to face daily, and I think Parag is right there. Yeah, basically for us as a local player, we have certain expectation of what our product needs to be, and of course that's driven by the market where we are operating in. And we spoke with, let's say, one of these uh, technology powerhouse from this country, the other ones, and at the moment, what we can say is we are doing this multi technology, multi country operation. So, for example, our cloud infrastructure is using one technology from one country, but our payment is actually driven by another, for example. And what we are trying to do is just to basically create something that is the best for the company that can serve the market the best.
Yeah, I think, and that's almost exactly what Parag was just saying when it comes to choosing your vendors and the argument there between the East and the West and the tech race, so to speak. Sopnendu, this is something, of course, that you know very well. I would love for you to weigh in on your feeling on how this plays out going forward.
Oriel, let me re-emphasize. I think the economic value capture for data producing country must be thought through properly, because the country which produce a lot of data, like Indonesia and a lot of these countries, don't have. I think the economic value capture has not been fair. I think they must have a policy in place, and they must think carefully of whether they're getting a fair share of the economic value of the digital economy. I think that's a very important consideration. We must all think through it, because if you don't get it right, there'll be a lot of this mismatch of the recovery process. So that's one piece. Second piece is that trust, because when data flows from a country to B country, trust is a huge factor to ensure that the economic value which comes out of it is sustainable. Large part of the current problem is lack of trust on moving data from a country to B country, and where do you store this data, where do you process this data. So trust is a big part. We got to find a way to build trusted data corridor. So this is the second concept in my mind, that countries have to start building trusted data corridor, and it comes with a trusted data pipeline, which includes, of course, the 5G network and all the capacity to build these pipelines. And the last piece is the data consumer piece, because you can have a great technology to ride on, but if the consumers are not protected from this data abuse, consumers are not protected with misuse of data, which may not be to their best interest, and the economic value given to the people who are also consuming the data may create some amount of this dysfunctional growth in digital economy. While we should not get uh, I'll say, misled by the big numbers, big investment numbers, the big valuation, because they're to me largely misleading on the real growth. What we should look under that, what is really happening. And I'll tell one example. During the crisis, almost every country had one common crisis, that the lack of people's access to a sustainable financial services. Almost everybody were struggling to meet that end, because they didn't have a sustainable pension plan, they didn't have a sustainable social safety network which they could dip into. So how can we say that we have a massive advancement in the sector when countries were struggling to get the people to access their own savings plan because they didn't have one? And having an unsustainable economic system, a financial system, is something all of us have to look at, be focused on, because you have to fix the fundamentals. If you don't fix that, the next crisis will continue to have the same impact. And the last piece, also on the supply chain side, I think a lot of technology was focused on productivity and efficiency. They have to shift to resiliency and sustainability. You've got to find an ability using AI and all the analytics to switch your inventory sources. And if you don't focus on such technology, we'll have the next disaster will have the exactly same impact.
Yeah, I think so, absolutely. Sopnendu, thank you so much for that. Now, we've only got a short time on this conversation left, so I wanted to sort of bring together all of these issues that we've been discussing and focus on the economic recovery in Asia, and largely that comes down to technology, as we've been discussing today. But Jenny, I wanted to ask you on the China side. You know, there's a couple of big criticisms that over the many years that I've been covering global financial markets, China's come under criticism for transparency. China's come under criticism for security issues. You know, especially on the technology side, as Sopnendu was just discussing. So when you look at China and what we've been discussing about the fact that this country may be the one to lift the rest of Asia out of this recessionary period, you know, given what we're seeing in terms of trade and the recovery there. What are you most concerned about when you look at China, when you look at China going forward and China's ability to lift the rest of Asia?
Yeah, so I think there are a couple of things that China need to work on, right? I think we have to put this in context. A lot of the progress and growth in China is really only in the last 20 years. And so for a country that has 1.4 billion in population, there is a difference in priority stack in terms of what needs to happen, right? How do you, allow the whole of China to grow and progress almost at the same rate without leaving a huge part of the population behind? So I would say that definitely there's still a lot of areas that China needs to work on. But internet and technology has actually helped to accelerate this. I think going forward, a couple of areas. I think you highlighted one, on the this is a country that can generate a lot of data. But data that is unstructured, data that's not processed, data that's not made sense of, has no value. So I think there is a lot of discussion. There's also policy regulation that's actually in place that governs different sectors. I think that's where the refinement will go on. For example, within the healthcare industry, within even the education industry, within the consumer e-commerce industry, how data, telecom industry, for example, how data can be made sense of, structured, and yet being shared in a way that protects the privacy and security of this data as well. So there's discussion about what kind of standard makes sense for sharing. What type of AI technology needs to happen on the data privacy computing side to allow that to happen cross industries. So I think that's one. I think in areas of IP protection, we have seen that China has progressed quite significantly in terms of allowing the IP system to interact and to integrate with the global system, and also to institute that awareness again of IP protection. So I think one, around data, there's a lot of work that's going on there. And then two, I think around technology has to grow in a safe environment, and in a fair environment as well. And so there's also a lot of discussions and tech about that as well. So we do expect to see more, but most of all, I think the other area that is happening very quickly is also the capital markets system. I just want to highlight that as a different viewpoint, is that I think this is one area the financial system has been pretty much shut off from the rest of the world. And I think that over the next 5 to 10 years, we're going to see more accelerated capital markets reform as well. And so what that means is that the whether it's through the more recently opened Shanghai Star Market that's over the last year and a half has accelerated and allowed for innovative companies to list, but there's also a directive to allow these companies that are so-called the concept of a CDR, the China Depository Receipt, companies that are structured offshore to actually tap the China market as well. And so for that to happen, a lot of underlying technology, policies, regulation has to happen. And perhaps this is one step closer, to having the capital market system integrate with the rest of the world. So that's a much larger topic, but I would say over the last year and a half, we have seen very, very encouraging signs well in the right direction.
Talking about encouraging signs, Rachmat, I think you indicated that, from your business and what you're dealing with at the moment, you're seeing very encouraging signs from the people, be it a mum and dad business, that are actually on your platform and working on your platform, because there's this rapid uptake when it comes to adaptation of new technologies and innovation. From your perspective, what are you most concerned about when it comes to Indonesia's growth and Indonesia's recovery going forward?
Yeah, I think this COVID basically forced us to change, and I think basically, I think the problem in Indonesia is that because we are growing, previously we still have a lot of things to clean up. Yeah, but once you are growing, you focus on the growth, and maybe worry less about efficiency. And at this time, because of COVID, I think we start looking into things that how can we do things better, more focused, and more efficient. So I think once we are we contain this COVID situation, and let's say it's over, I'm actually very optimistic that people in Indonesia will now have a leaner, stronger infrastructure, and we can capture the economic growth moving forward.
Okay, all right, great. Before I bring Parag in to sort of wrap this up for us, Sopnendu, let me ask you, how optimistic are you about a recovery in Asia?
I think I'm highly optimistic because I'm sure most of the countries will figure out a way to flatten the curve, and at that point of time, for investors in US who are watching this show, there are three things they must look at. Find the country which has the highest potential to create data, find a country which has the best infrastructure to recover faster, and find a country which has the best policies available to be for a fair, a transparent, and well thought through data policy. Lastly, consumers who are ready to consume this digital data. If you get all this right, take aside all the recovery, you'll get the right mix to invest.
Which country is that, Sopnendu?
Well, if I take any country, I'll get tweeted out, and I want to stay away from that. But I'm sure you can do research and figure out which country are having the best infrastructure and the most high potential data producing capacity.
Yeah.
China is one good example. Indonesia.
Actually, I'd like to add. I think Asia, individual countries. It's hard for individual countries to have sustained and hypergrowth given the size of the economy. So I think it's actually very important for the Asia, when we talk about the travel bubble for Asia, perhaps that would be similar to how you talk about the region recovering together. Because without the combined strength of the countries working together, the existing domestic market has its own challenges, and by and large, sometimes it's also too small. So how do we now bring it to an Asia region where there is more of a collaborative bubble, whether it's travel, data sharing, economy, health tactics and things like that. I think when that emerge, then I think we can see a very a new third party or a new third power that can actually operate sustainably over the long term.
And a very strong power at that, absolutely. Jenny, all right, Parag, a couple of minutes to go. Let me just bring you in to very briefly sort of come together and give us your overall view on Asia in the context of the discussion we've had today, and bring it all together for us.
I think we're saying very complementary and reinforcing things, even where, for example, Jenny has emphasized the track that China is on is very sui generis in terms of their policy, obviously the resources that they're able to commit, and the very independent, obviously, policy and regulatory environment. That said, just remember how much technology leadership and investment and capital China is providing for the rest of the region. China is now becoming is right up there with Japan and the United States as the largest investor in the ASEAN region. It is certainly the largest trade partner of most ASEAN countries. And again, let me just reinforce this point. This is not just what is happening right now. The last 75 years of Asian history is not the story of major wars and rivalry. It's the story of Japan's economic miracle, inspiring the tiger economies, Japan and the tiger economies inspiring the Chinese reforms and being the largest investors in China. And now it's the fourth wave of South and Southeast Asia, whose largest trading partners are the first, second, and third waves, and that are drawing the most investment from them as well. So that is very consistent with actually the things that Jenny is saying, but also what Sopnendu is saying as well in terms of what is stimulating these very rapid reforms, technologically, economically, and otherwise, to move us up the value chain. And Indonesia is absolutely one of the key, test beds for all of this. So, if I could, I would just reinforce the point that I think that we're pretty much on the same page here, despite the very obvious ideological and political chasms that exist in the region. On the ground, we see day in and day out a tremendous amount of pragmatism, and that's actually something that markets should be looking for.
I think that's a fantastic summary once again, Parag. Very much appreciate your time. And I'd just like to take the opportunity to thank all of our speakers today here at the Milken Institute 2020 Global Conference. It's been great to have you all with us. Rachmat, Sopnendu, Jenny and Parag, thank you so much for your time and for chatting to us here at the conference today. Just a note on the upcoming 2020 Milken Institute Asia Summit. This is being held on the 8th to the 10th of December. It's essentially a planned hybrid event from Singapore that will feature a combination of in-person, virtual and hologram sessions as well. So very much looking forward to all of that. Thank you all so much for joining us today.
Thank you.
Thank you.